Alexis Mazel-Pleasant, Managing Editor here at Food Logistics and Supply and Demand Chain Executive. I'll be your moderator today for this webinar titled Food Logistics 2.0, The Growing Importance of Logistics to the Future of the Supply Chain, where industry leaders with G3 Logistics will provide tailored solutions to food and beverage companies wanting to move their products efficiently across state and nationwide. Just a reminder to our audience to submit your questions via the Q&A console on the screen, and please check out the downloadable assets on the portal as well. Just click and download. And with that, everyone, welcome John Scully. I'm going to pass things over to you.
Thank you, Alexis. Hi, my name is John Scully, and I'm your host today for a conversation on the future of food logistics. I don't need to tell anyone that's participating in this webinar that the nation's supply chain has been relentlessly challenged over the past few years, and the debate continues when and if full recovery will occur. It is clear that maintaining the status quo is no longer an option. When looking ahead, it seems that there'll be more changes and confusion, including labor shortages, a tight warehouse market, and fluctuating supplies. A variety of threats remain that may prolong disruptions and become significant obstacles to supply chain management. Fortunately, we have some experts here today from G3 Enterprises who will provide us with an informative look at the future of food logistics. Over the next 60 minutes, you will hear insights from Brad Bussum, Vice President and General Manager of Global Distribution for G3 Enterprises, Randy Gray, Director of International Logistics, Global Distribution Team at G3 Enterprises, and Nicole Ostertag, Director of Business Development and Global Distribution for G3 Enterprises. As Alexis said, feel free to submit questions as we go through, and at the end, we'll have those questions answered, providing by our team of experts. So let's jump right into it. Brad, why don't you provide us with a brief overview?
Yeah, thank you, John, and good morning, all. We appreciate you taking your time out of your day today to discuss some very relevant topics within supply chain logistics. So moving on to the agenda, we're going to kick off with a brief overview of G3. Next, we'll dive into the economy, the freight market, and our perspective on rates going forward. As everyone knows, regulation continues to be a factor to consider as we design our respective supply chains. So Randy will touch on both regulation as well as the ever-evolving environment at the ports. And then finally, Nicole's going to walk through how shippers can incorporate rail into their supply chain, benefits and considerations when leveraging a 3PL to support your supply chain requirements, and some strategies to help optimize your supply chain. So moving on to G3 as background for those who haven't had the opportunity to do business with G3, G3 is a family-owned company that provides packaging, logistics, real estate, and mineral solutions across a broad base of customers and industries. Specific to logistics, we have decades of experience providing logistics services that optimize our customers' supply chains and enhances their right to win. We place tremendous value on the relationship that we develop in partnership with our customers. We see ourselves as integrated partners and continue to invest in capabilities in support of our customers. So with that, I'll transition to an update on the economy and how that impacts how we think about logistics and the industry in total. The U.S. economy continues to be top of mind for supply chain professionals, given the impact consumer spending and behavior has on our respective area of responsibility. We all experienced the shift from goods to services as the economy started to open up, and the impact that had on both global trade and domestic transportation cost to serve. Today, it's really a story of headwinds and tailwinds. There are a number of leading indicators that point towards a recession. Last week, the Fed increased interest rates again as they continue to battle inflation. Railroads are a great indicator of economic health, and they continue to be challenged with soft shipper volumes. Capital remains challenging to access in the current environment, which has impacted both consumer and business spending. Single and multi-unit family starts or new housing is down year over year. And back to my earlier point around headwinds and tailwinds, there are some bright spots emerging. We saw fresh economic data last week that reinforced optimism that inflation can fall without the U.S. suffering a full recession. economic output accelerated in recent months on the back of solid consumer spending. Inflation decreased in June, and wage growth, while still elevated, slowed. So given all the headwinds and tailwinds, I think most economists agree that the economy will continue to be challenged, but will likely stick a soft landing. Now translating the current economy to logistics is the art. Within global trade, trans-Pacific rates are starting to see some upward pressure. Domestic rates remain low. However, there's a number of factors, including a very active labor environment, that can and will impact the overall logistics industry. So looking at the trucking industry, in total, this environment remains very dynamic. Since last October, the number of long-haul interstate carriers leaving the trucking industry has been around twice the rate of those joining the industry. The long-haul freight market is rebalancing. Given this fact, demand and the number of trucks in the market will be a key data point to monitor for the balance of this year. As we approach peak season, it's important to note that truckload demand historically will start to increase prior to peak season, ahead of major retail events in the fourth quarter. The Trucking Ton Mile Index, or TTMI, it's a very reliable indicator of truckload demand. The index suggests that although we remain in a freight recession, we are likely near the bottom. Looking forward, the expectation is that volumes will be relatively flat through 2023, and any meaningful increase will likely occur in 2024. Other truckload demand indices worth watching include the monthly CAS and ATA tonnage indices. The CAS shipments index for June fell 1.6%, and year over year, it's down 4.7%. Declining retail sales and ongoing destocking remain the primary headwinds to freight volumes. Conversely, the June ATA for higher tonnage index increased by 2.1%, which was very similar to the trend we saw in May. So although we remain in a freight recession, carriers are seeing some improvements in tonnage. A multitude of factors has caused a recession in freight, including stagnant consumer spending on goods, lower home construction, falling factory output, and shippers optimizing their freight profile compared to the frenzy during the goods buying spree at the height of the pandemic. However, the magnitude of the year-over-year declines is improving, which is a great leading indicator that the industry is likely near the bottom of the current freight recession. So as a shipper, and given the current state of the industry, it's important that we evaluate our supply chain, ensure that we're building resiliency into our strategy, eliminating inefficiency, and enhancing supply chain flow. Later in the presentation, Nicole shares some strategies that can be deployed to achieve this as you optimize your respective supply chain. So moving on to our perspective on freight rates. So as mentioned on the previous slide, we are likely at or near the bottom of the freight recession. So how will that translate to our underlying cost to serve? The current market has shown very soft demand. Therefore, small changes in capacity in the spot market can significantly impact spot rates in the short term and contract rates further down the road. Dry van spot rates have been dredging along the bottom for a few weeks now, and at some point in the short term will converge with falling contract rates. When this occurs, we expect the current market to start to recover. The recent collapse of Yellow, the third largest LTL carrier, will certainly impact the spot market. This will impact LTL capacity. It will drive upward pressure on rates. Currently, the expectation is LTL shippers should expect rates to climb in the mid to single digit percentages. From a contract rate perspective, we spoke to all the headwinds impacting the industry in total. Given we do not see a short-term solve to these headwinds, contract rates may continue to see some downward pressure in the coming months, although we don't expect the amount to be meaningful given all the other indicators that point to the industry being at or near the bottom of the freight recession. The other factor that we can't ignore as shippers is the fact that all the primary constraints in the trucking industry remain intact. That includes the driver shortage, increasing regulation that will drive carrier investment, and the inflationary pressures that continue to impact carriers' underlying operating cost. So to put a bow around this slide, our perspective is rates are likely at or near the bottom from an industry perspective. Upward pressure on contract rates should be expected in the future, but unlikely until the back half of this year or into 2024. LTL rates will feel immediate pressure, largely as a result of Yellow ceasing operations. For those heavily reliant on the LTL market, it's a great time to evaluate if and how you can consolidate your freight to ship full truckloads to minimize your exposure to the LTL market. And G3 can certainly help with that evaluation. So now I'm going to pass it over to Randy, who will provide an update on the current regulatory and port environment.
Excellent. Thank you, Brad. Incredibly insightful and useful information. So again, thank you. At G3, we closely track all regulations that can have an impact on the various services we provide to our customers. One regulation in particular that we are tracking very closely is the Advanced Clean Fleet Rule, or ACF. Earlier this year, 6 states adopted California's Advanced Clean Fleet Rule, which requires manufacturers to sell an increased percentage of zero-emission vehicles to the states that have adopted the rule. Now, California, working to get ahead of schedule, California specifically is working on an accelerated large-scale transition to zero-emission trucks. So why does this matter? Why is this important to us? Well, clean air for one, absolutely. That's incredibly important. But also, if you import or export goods from California, the regulation specifically applies to drayage fleets with over 50 million in annual gross revenue, or that have more than 50 trucks in their fleet. And this regulation takes effect on January 1st of 2024. So next year, all non-zero emission trucks will be required to be registered as such in order to continue operation to the end of their useful life. And then all new registered trucks will essentially be required to be zero emission vehicles, also known as ZEVs. So these regulations are all in support of the goal for all drayage trucks to be zero emissions by the year 2035. And now labor. Brad touched on it a little bit, but there's been a lot of talk about labor and labor shortages in many aspects of business. And just as in other markets, labor will continue to be a very active environment when we consider railroads, ports, and over-the-road transportation providers. Our focus at G3 is to have sound strategies to guarantee capacity assurance and service reliability to our customers. Essentially, that's our responsibility to make sure that our customers have little to no impact due to labor. Now let's talk about ports. So G3 also operates in all major U.S. ports, and we closely monitor vessel schedule reliability and port labor negotiations. We do this in order to appropriately position ourselves to best support the needs of our customer, anticipating what's going on in the market. And very fortunately, the market has seen great improvements. When it comes to vessel schedule reliability, we've seen positive trends after some very turbulent times. I think everybody on this call can relate to that in some form or fashion. You can see here on the top right graph that things started to look and feel a lot better around July of last year. Reliability will continue to improve with reduced blank sailings and little to no berthing wait times at ports. When we look at labor agreements, specifically on the West Coast, there was a lot of concern for importers and exporters, shifting more than 16% of historical volumes to other areas due to the threat of port strikes. We were really happy to finally see the ILWU West Coast come to an agreement after 13 months of long negotiations. We saw a little bit of disruptions, but nothing too crazy. That contract is currently going through the standard 3 to 6 month ratification process. Now, on the flip side, ILWU Canada is a little bit of an ongoing saga. After striking for a record-long 13 days, work had resumed, a new contract was proposed, it went in for a vote, and unfortunately, as of yesterday, that proposal was rejected. Now, the union can still strike again, but they require to give 72 hours notice, which has not yet been communicated. So work is ongoing. Compensation and expanded jurisdiction over the maintenance jobs at the marine terminals remain the major sticking points in those negotiations. It's also projected that the backlog is going to take weeks. We're going to be well into September and hitting up until October before we get through the backlog caused by the strikes that happened a couple weeks ago. Looking at the East and Gulf Coast, where share grew 6% on the East Coast and almost 50% for the Gulf Coast, and then Savannah opening a rebuilt berth, adding 1.5 million TEUs of capacity. Maritime officials are communicating that they are well ahead of schedule, already starting labor negotiations ahead of the contract expiration that's due in September. All of that effort is with the full intention of a speedy conclusion. We'll keep our fingers crossed there. As a whole, U.S. container import volume is down 10% versus last year, but relatively close to 2019 volumes, only down 2.4%. That's all I have for port updates. Now I'm going to hand it over to Nicole to talk about right sizing for rail.
Thanks, Randy. Always good to keep track of what's going on in our ports with that ever-changing environment. Moving into rail, you may not know this about rail, but the United States has the largest cargo rail network in the world, with over 140,000 miles of railroad track. Rail accounts for about 28% of the total U.S. freight market and ships about 1.7 trillion tons of freight each year. Intermodal rail is actually now half of all of that traffic. And rail continues to grow with an expected growth rate of 30% by 2040. One of the ways that you can solve for uncertainty in your supply chain is with rail. Having a diverse modal strategy was a leading success model during the pandemic. It can also provide bulk or slow-moving products in an efficient and inexpensive model while balancing moving your high-paced products via truck or other service-oriented solutions. Consolidation and deconsolidation services can be an easier entry point, making more modes viable for shippers. This could be a solution to those potential problems that Brad mentioned around the LTL market. Consolidation allows for regionally similar freight to move together for economies of scale that are achieved in full carload shipping. Intermodal also allows for single truckload quantity shipping at intermediate speed. Finally, rail can provide a relief valve for other modes of freight. For example, when the West Coast ports were shut down, many shippers were able to use rail to land their goods at an East Coast port and get them by rail to destination. This reduced container usage and delays and ultimately got products to market sooner. The volatile pricing of both base truck rates and fuel over the past 3 years has driven many customers who had never used carload rail before to wonder if it has become a better fit for their business. Rail has made several efforts to become a more modern supply chain solution in recent years. Specific to food and beverage, shippers are now utilizing their own privately owned rail cars that are insulated to protect against major temperature fluctuations, in addition to railroad-supplied boxcars. Railroad cars are also being designed with more weight capacity and better underframes to improve the smoothness of the ride. These private cars have an especially cushioned underframe that reduces damage even further on rail, and they are now outfitted with the latest technology, things like door alarms, temperature alerts, and GPS, that give more information about product in transit than years past. There have also been a number of dunnage improvements to reduce damage shipping on rail. Several of the railroads have also invested in API programs that are driving the ability to get more real-time in-transit data on rail as well. Many retailers and end customers are driving shifts to more green practices within the industry as well. Rail shipping is one of the ways that you can achieve those scorecard results, as it is on average 3 times more fuel efficient than truck, and is completely self-dependent on investment, using roughly 15% of their revenue every year to make their tracks improved, safer, and more efficient. Many people ask me, how do I know if rail is right for my company? Or why would I incorporate rail if truck prices are stabilizing, as Brad mentioned? Rail can be an excellent option to diversify your supply chain. We at G3 saw a lot of success with having multimodal capabilities during the pandemic, allowing us to quickly and easily shift between modes to deal with sometimes weekly or even daily shifts in supply or service. Consolidation has also allowed more small or mid-sized companies to access rail. Intermodal only needs to be shipped in truckload quantities, and several 3PLs, including G3, now offer LTL consolidation or deconsolidation, allowing for freight to mix together to like destinations and still receive the savings of carload rail. How can you tap into rail? The first thing you need to do is evaluate your supply chain and look for large volume, dense lanes over long distances. If you find you can regularly ship 3 to 4 truckloads to the same region, carload rail will work for your supply chain. If not, you may want to look into a consolidation or intermodal model that allows you to still ship in truckload quantities. If you're struggling to figure out where to get started, a rail-oriented 3PL may be right for you. That may lead you to the question, what is a 3PL? A 3PL, or third-party logistics provider, offers outsourced logistics and supply chain management services to businesses. These services can include things like transportation, warehousing, inventory management, order fulfillment, customs compliance, and value-added solutions. The major benefits of using a 3PL all surround efficiency and centers of excellence. 3PLs offer you the opportunity to forward place your inventory closer to your end customers. This allows you as a supplier to increase your speed to market for product distribution and reduce your delivery times. If there's one thing that the pandemic taught us, in that logistics is always changing and it can change at any minute, and this can certainly be hard. Allowing logistics experts to handle your logistics allows you to focus on your core business activities, reducing your operational stress. This also allows for opportunities to streamline your supply chain and let 3PLs utilize their economies of scale to lend those cost advantages to you. Your 3PL will have an established network of resources and multiple customers purchasing the same services. A good 3PL will also lend you their expertise and specialization to your business. They are professionals that can provide you with in-depth knowledge and experience in managing supply chain complexities. 3PLs can also provide you access to better technology without the direct upfront investment. This should lead to efficiencies for your business, whether it's optimizing inventory management or enhancing overall operational productivity. And finally, one of the biggest benefits of a 3PL is flexibility. The 3PL's network becomes your network and allows you to scale your logistics operations based on demand fluctuations by leveraging the 3PL's extensive network. If you're considering adding a 3PL, you can diminish some of the challenges by making sure that you pick a partner you trust. Your supply chain is critical to your enterprise, and you need to be able to entrust them with significant responsibility. If you are using a local or regional 3PL, you may also need to solve for allocating orders to different companies across the nation and then consolidating that data back from multiple sources on your backend for visibility. To wrap up everything that we've talked about today, what's next? How would you get started with a 3PL? The first step is to find a 3PL that serves your business segment and provides the services that you think you need. For example, G3 specializes in food and beverage, as well as the compliance elements that go along with that industry. G3 also specializes in rail transportation and ships over 10,000 boxcars annually. So if you're looking for a 3PL to help with rail, then G3 would be a good fit in that example. If you don't know where to start, you can contact G3 for a supply chain review, where we can analyze all of your shipment data for network optimization opportunities or freight changes. This analysis can then be used to create a roadmap for your success. That's all the content that we've prepared to provide you with today. We're now going to turn it back over to John for a Q&A portion of the event.
Thank you, Nicole. That was really informative. A lot of good information there. And so why don't we get right to the questions? Brad, how has rail improved as it relates to today's supply chain function and situation?
Yeah, great question. As we think about rail, a couple key points to take away. So first, shipping rail is a very, very sustainable supply chain solution. All railroads are committed to some of the highest levels of carbon reduction through innovation, such as zero emission locomotives, in an already green mode of transportation. Second, stability, critically important in the current environment. Rail is less reactive to quick market swings, which benefits you in the form of rate stability. Rail's a great solution for your core business. Additionally, a lot of risk was recently removed with the addition of a new long-term contract for the majority of the Class 1's railroads labor force, which provides us as shippers stable labor pools for the foreseeable future. And last, technology. So technology, Nicole touched on it a bit, but railroads are making huge investments into things like API integrations, predictive ETAs, and a whole host of additional capabilities to bring more visibility to your supply chain. Years ago, shippers had to rely on a limited data set, like my car is at origin, and now it's at destination. The railroads have evolved significantly, and you can also couple that with technology available in private rail cars, like GPS monitoring, door monitoring, temperature monitoring, and even shock monitors.
So are there other benefits to utilizing a private rail car, Brad?
John, yeah, specific to private cars, there's really three key benefits that I think about. One, cost to serve. Two, sustainability. Three, capacity assurance. First, cost to serve. Again, rail's the most cost-effective mode of transportation. It's a fantastic strategy to optimize your underlying cost to serve. Second, sustainability. We talked about it previously, but this continues to be a key driver for supply chains across the U.S. And rail's a very sustainable mode of transportation that helps you reduce the overall carbon footprint of your supply chain. And then last, capacity assurance. So when you leverage private rail cars, that adds stability to your supply chain, and it provides you with the benefit of controlling your own destiny. Specific to our fleet of private rail cars, our customers gain the benefit and access to capacity without the underlying capital investment. And we're also in a position to flex assets across our customers' base to optimize utilization based on seasonality of business.
Okay. Randy, this is a popular question today. How can I determine if my company is big enough to be able to effectively use rail or 3PL warehouses?
Yeah, that's a fantastic question. And I'll start off by saying, give us a call. Nicole touched on it a little bit during the presentation, but G3 has a team of supply chain experts that can take your current supply chain. And what we'll do is we'll run it through our network optimization software to determine what solutions are best right for your business. So this includes mode of transportation and center of gravity. What you can expect in return is a recommendation on how to enhance your cost, quality, and service of your specific supply chain. So bottom line, if your business isn't logistics, you will likely benefit from the insights that a 3PL can provide for you. And best case scenario, you're able to fully utilize all the discussion points that we talked about today.
Okay. Brad, this might be best for you. There seem to be so many challenges my business must consider. What's the best time to integrate rail for my business?
Yeah, certainly we've all experienced just tremendous variability over the past few years. Given that, I take the position that the best time is now. So if you look at all the volatility over the past 3 years, as a result, supply chains have incurred tremendous inefficiency, and we've all had to successfully navigate that. But today we have an opportunity to build resiliency in our supply chain, optimize our center of gravity, enhance service levels to our end customers, improve order cycle time, and ensure product quality. Rail's a key enabler and a very strategic decision you can make to optimize your cost to serve and reduce your overall risk to your supply chain.
Okay. All right. Very helpful. Randy, this might be best for you. What is the next big innovation coming to logistics?
Okay, so innovation going forward for G3 specifically is very centered around positioning ourselves to optimize our customer supply chain. We continue to invest heavily in the capabilities to enhance our customers' right to win. This includes expanding our rail-served warehouse network and fleet of private insulated boxcars. I also believe that visibility is very important to customers. So we continue to heavily invest in technology that provides our customers with the end-to-end real-time visibility across their supply chain in both transportation and warehousing.
Okay. Nicole, you mentioned the California regulatory environment and what's on the horizon. How do you think those regulations will affect TL capacity and intern rates?
Yeah, great question, John. Regulations across not just California, but all states are going to continue to drive the need for the truck industry to invest heavily in both new and improved equipment. And this cost of investment is not only going to affect the industry, but a number of other items that Brad mentioned earlier on in the presentation will also affect the inflationary market. These are things like the cost of compliance as well, which is a common regulatory issue that we see these days in the trucking industry. Things like the driver shortage that Brad mentioned earlier, with twice the drivers leaving the industry as they are entering, are all going to cause upward pressure on rates, both in the near term, end of 2023 to early 2024, like we mentioned, but as well in that long term, because we don't see that horizon changing in the long term.
Okay. And Nicole, why G3?
Yeah, great question. I think one of the biggest reasons why you would choose G3 is that we have decades of experience providing both integrated and reliable solutions for over 2,000 different unique customers across multiple industries. We're a logistics provider that has spent over 50 years perfecting supply chains for some of the best brands specific to food and beverage. And we have an understanding of that industry specifically that only comes from that experience. Our capabilities are also very wide-ranging. We have end-to-end transportation solutions across all modes of transportation, as you heard throughout our presentation. And we have access to an extensive national rail-served warehouse network. And bottom line, we just really partner with our customers to support all facets of their supply chain. And we have a phrase at G3 that we like to say is that we exist for our customers to succeed. And that's really embodied throughout everything that we do at G3.
All right. Brad, how does G3 stay current with all the changes going on in the industry today?
Yeah, I mean, it's a good question. It's evolving, and we spoke to it in depth in this presentation. But you know, across our business, we have a team of supply chain analysts and experts. We stay very close with our carrier partners, as well as our you know, key suppliers, as well as all the updates, both on the regulatory as well as the operating environment. So, you know, that's critically important to continue to monitor the trends of the industry as we think about how that impacts our underlying supply chains and how we optimize those to support our end customers.
And if anyone has questions they'd like to ask, feel free to submit them in the inbox, and we'll get to as many as we can. This is a question for the three of you. What, in your opinion, is the next big innovation coming from the supply chain?
Yeah, I can start with that one. I think the most critical thing that we're seeing from our customers is that drive for real-time visibility to their shipment data. And that's not just on the transportation side, but also on the warehousing side. So I think the next big thing is really any of those technology investments that allow customers to see their products in real time. Think about services that have geofencing that provide you, updates every minute to where your truck is in transit. You can do that same thing on rail now. And then you're also using technology to have real-time looks at inventories and warehouses. Think about innovations like drones in warehouses, like virtual walkthroughs for a visit. Those are all innovations that are really simple, but really practical for your business.
Yeah, John, I mean,
yeah.
taking a similar lens as Nicole, I think as you look at all the inflationary pressures that have impacted supply chains over the past few years, technology is going to be critically important, but I also believe automation is going to be, very, very prevalent throughout the industry. So as you think about automating Warehousing, as you think about AI and leveraging that for activities like customer service, I think that's going to continue to be a key driver and a theme that we see throughout supply chain logistics.
Okay. Randy, anything you'd like to add to that question?
Yeah, just the other thing that I can think of, it would be anything that's going to support inventory management for customers. I think real-time visibility and automation within warehousing absolutely supports that. But you think of inventory management and rapid replenishments. What we've come into this year is high inventory levels. There's many customers working to reduce days of supply, things like that. So just added technology to support that rapid replenishment and inventory management.
Okay. Nicole, how do you see the trucking industry bankruptcies affecting the industry?
Yeah, great and timely question, John. As Brad mentioned, obviously we had the Yellow collapse. We also had a Tiger Coal close earlier this year. So that's a great question. There was also a question earlier about legislative changes. I think another factor is really that driver pay element to it, stemming from the lack of supply with that driver shortage and the strong labor environment and the insurance elements that I mentioned as well. These increasing cost pressures have created more narrow margins, and the volatility of truck rates has led to uncertainty that has made it harder for trucking companies to ride out the ups and downs of the recent market. That's where we kind of revert back to that strategy that I mentioned earlier in the presentation about having a multimodal network. That allows you to flex between different types of transportation and make sure that you're not all eggs in one basket with a trucking carrier that may not have that stability in today's ever-changing market.
Okay. I don't know which of you would be best to answer this, or all three. How can I know my shipment, whether it's food or beverage, is being handled with care and timeliness?
I can take that one. So we talked a lot throughout this entire presentation about, G3 has, we have supply chain experts. And with that, becoming an expert in your field comes with caring about what you're doing from end to end, from picking a case in a warehouse to getting it on a truck and shipping it across the country or around the world for that matter. Everybody at G3, we care very deeply about our customer and provide nothing but a white glove service from end to end.
Okay. All right.
I'll also touch on that one, John, if time allows. Specific to the rail elements of that question, G3 has a staff of experts with extensive rail experience. I myself came from the railroad for almost a decade. And we have a team of gurus that will work with you on your rail solution to design a load pattern that works for your products. And we have some of the industry's best record of damage as it comes to the types of products that we've custom designed load pattern solutions for. So that's a great opportunity to partner together and find a solution that works for your specific products, your packaging. We'll even sit in on your supply chain meetings to talk about improvements to your packaging that may work better for rail, the design for your pallet, all of those little white glove touches like Randy just mentioned. We also have technology that gives you access to see your products when they're loaded on a truck or an intermodal container or a rail car, as well as when they get offloaded at destination. So you can see in real time how your products moved on whatever mode of transportation it used with G3 specifically. And a good 3PL is going to provide you that same access, whether it's G3 or somebody else in the industry.
So Nicole, let me ask you this. Is there a certain size that is a right size for a business to adopt an intermodal strategy?
Not necessarily, John. If you're shipping in a full truckload quantity, it's the same quantity that you need in order to use intermodal. Really, the big difference comes in if you have reliable shipments going to the same general area of the country on a consistent basis. The more you're able to have consistent freight with intermodal and rail, the more you're able to stabilize and utilize those cost efficiencies of rail. If you don't have that just inherent to your own business, that's where, again, a 3PL could be really useful to you because they can pool your shipments with other customers that they have shipping from the same region of the country to another region of the country. And together with the other customers of that 3PL, you can get that consistency to make sure that you have that locked in rate that's not fluctuating week to week.
Okay. And Brad, maybe this is best for you or any of you three. Is the ongoing labor shortage going to remain a threat to the logistics sector?
Yeah, good question, John. I mean, our perspective is yes, it will continue to remain a challenge to the logistics space. We spoke in depth about how active the environment has been from the 13-month port negotiation that Randy touched on to the rail contract negotiations that Nicole touched on, plus all the recent news around, challenges with Yellow as well as UPS. So, at the end of the day, our perspective is the current environment will continue to remain challenging from a labor perspective, which is why I think it's so important that, we as supply chain professionals think about how do we build that resiliency in our supply chain to protect service and protect, quality of our products and ultimately be in a position to deliver to our end customers.
Okay. Nicole, are the rail strikes resolved at this time?
Yeah, great question, John. We had a lot in the news about rail strikes towards the end of the year last year. Most of those strikes were resolved in December of 2022. We've had a number of small strikes and ongoing negotiations that have continued throughout the beginning of 2023. Many of the Class 1 railroads in the U.S. reached different arbitration agreements with the different labor unions that were involved. There were 14 different unions that had contracts up for renewal with the Class 1s. So that was resolved in December of 2022. And then many of the Class 1s had separate negotiations to go above and beyond the legislation that was pushed through to resolve that. Additionally, the CN and CP up in Canada have had smaller strikes in the beginning of this year. Most of those were resolved as of June and July.
Well, we've got another rail question, a lot of questions about rail. What are the primary risks of utilizing rail for a food or beverage business?
Yeah, I will take that one as well. One of the big concerns that people have when they ship rail is typically around the time that it takes. So you have two different options when you ship rail. We talked about intermodal, which is more of an intermediate cost and an intermediate speed. And then you have carload rail, which is typically the lowest cost option, but also the slowest mode to market. So really the biggest risk of utilizing rail from a speed to market perspective is organizing your supply chain around that rail solution. That's where this really works well for your core business, things that you can really plan in advance to have that 1 to 3 week time span worked into your supply chain so that you're not leaving yourself out of stock at destination. If you can do that, you can really resolve the concern around lead times with rail. And that's where you can also mix in that intermodal component to still get some of the green and cost efficiencies and those benefits to rail without necessarily adding the full time that it takes on a carload rail model.
Well, that is.
Yeah, Nicole, I think the other thing, just to add to what you said, from a supply chain perspective specific to transit times, I think it's important that businesses that do choose to leverage rail, they evaluate their planning parameters on a quarterly cadence just to ensure that the transit times are appropriate as they think about the supply inputs to ultimately support their outbound demand.
Okay.
Yeah, that's another way where private cars can also be beneficial. You get a lot more feedback on your transit times, where those cars are sitting within your supply chain, and that can really feed back really good information to your supply chain folks as they're planning those parameters that Brad mentioned. The other piece that's really relevant there is that potential for insulation or refrigeration with the railroad-owned assets as well, that can provide that temperature control. And that's really important to your supply chain as well.
And is that type of information in real time, or how does that process work?
Yeah, absolutely. With G3's private assets. We can see those cars in real time. Every 10 minutes, we get pings that let us know where those cars are. So we can share that information with our customers via API connections direct into their systems, through our customer portal, different avenues to get you that information in real time. Yeah, I think there's a lot of improvements happening with the railroads from a detector perspective as well. They're moving away from some of the wayside detectors and moving to more of a modern geofencing model. They're using things like predictive ETAs to give you better visibility to schedule changes and how that's going to affect the arrival of your car as well. And those can all be translated to you directly with the railroad, or via your 3PL into your system as well.
Okay. And with all the news of the day of rail derailments, is that a concern at all?
You know, not for me, John. Rail continues to be the safest mode to move your products across the country. It has a very low safety rate. It does tend to end up in the news when there is an incident with a derailment, just because of the scale that those can sometimes entail. But the overall safety rate of rail is the safest mode of transportation to get across the country. Railroads are also investing a lot in their infrastructure. Go ahead, Brad. Is there something you'd like to say?
No, I was just going to add, and the environmental benefits are positive as well.
Yeah, absolutely. Like we mentioned, rail is 3 times more fuel efficient than truck. So that's one benefit in today's world. Railroads are also investing, just like the trucking industry, in zero emission locomotives and testing that. Union Pacific, for example, just came out with information where they'll be testing up to 50 locomotives that are zero emission and looking to find ways to integrate that in their network. And a lot of the other class ones are doing the same.
Okay. Final question for all of you. What's your outlook, your personal outlook on the future of logistics as we sit here today in the summer of 2023? Brad?
Yeah, it's certainly a crystal ball question, but you know, if you look at the challenges that we all collectively faced over the past 2 to 3 years, I think supply chain logistics really went from a back end function to front of mind for most companies. And it really has forced us to reevaluate how we think about integrated planning end to end across our supply chains to support the demand inputs all the way upstream to production. So as I think about the future, I think there is going to be a heavy focus on how do shippers optimize cost, service, and quality. And I think you're going to see automation heavily layered in. I think AI is going to be a hot topic within supply chain logistics. And I really think all shippers are going to be very focused on how do I drive efficiency that enhances my right to win.
Okay.
Yeah, and I'll add on to that. So being a part of the logistics industry, I'm optimistic in that I'm excited to be a part of the challenge. All of the things that Brad just laid out, right? We have to get creative to find new solutions to problems, and be very focused on enhancing and investing in our technology to give customers the visibility and the visibility that they're looking for. So me personally, I'm very optimistic because it's a challenge for us within logistics. It's ever changing and evolving, but we're certainly up for the challenge here at G3.
And Nicole.
Yeah, I'll chime in with a little bit more of the same, but AI and robotics are increasing the amount and quality of information that we're receiving across the entire supply chain. And this is really driving the fastest evolution of technology that I've seen since I've been in the industry. And that's allowing us in logistics structures to shift to more specialized solutions tailored to different customer segments, modes of transportation, and distribution networks. And I'm really excited to see how that evolves, as I think logistics is just going to get more and more efficient and more tech savvy over time. And I think that's really exciting, both as a logistics provider and as a customer who is going to have much more visibility to my products in every element of that supply chain.
Well, I want to thank all three of you for some fascinating insight. You gave us a lot to think about. If you would like more information about G3, go to www.g3enterprises.com. If you have questions you would like to continue to submit, feel free and we'll get back to you with answers. And at this time, I'd like to turn it back to Alexis.
Awesome. Thank you, John. And thank everyone for joining us today. An archived version of today's presentation will be found on foodlogistics.com, or you can access the on-demand version from your registration link. This is Alexis Mizell Pleasant, Managing Editor here at Food Logistics and Supply and Demand Chain Executive, and I hope to see you at a future webinar.
Thanks all.
Thank you.